All right, traders, let's get into it. Stocks or Forex during a recession. I don't think this is going to be a biased review. Yes, we talk a lot about FX on the channel, but I have a deep history trading in the equity markets. That's where I first got my experience. All right, so I feel like I'm right there in the middle. I think both asset classes are extremely important. Trader, their job is to seek opportunity, and if you have the capacity to trade in the stock market and trade in FX, then you go where you're most comfortable. But what we're going to be talking about by and large is how markets are affected during a recession, and really where are the most predictable price moves, price actions to play out. Because let's get started with the stock market. So we know during a recession right now, let's talk about this 2022 recession. It's hard to even call it a recession, right? Why? Because there are many market participants who are yet to say, hey, we are in a recession. And then, of course, you have a whole nother side that say we've been in it for 3 years and all this other stuff. The stock market, if we look at the S&P, yes, we've declined. We're sitting at a 38.2% fib, right? And that's from the COVID low. But if we pull way out here, right? I mean, let's go back to 08. I mean, we're still holding some pretty serious highs, right? I mean, let's draw from the low here in 08 to the high, and yeah, we're sitting right around that 23.6. So we get a little bit confluence there, and that's awesome. But by and large, this isn't a very dramatic price move, not yet. For the year, 100%. We are definitely selling off quite dramatically. But the way market participants are trading the index, there isn't that conviction. When you look at the currency markets, though, right? When we look at the US dollar, well, let's take a look at the US dollar since the beginning of 2020. Again, right around the time, 2022, right around the time many people started to fear that we were entering into some market turmoil, right? Well, 2022, we have already hit the highest levels on the dollar in the USD that we've seen past 2008. I mean, TradingView is having a hard time figuring it out. Okay, the US dollar, though, is at really an all-time high for the 2000s. All right, I think we'd have to go all the way back to 1987 for us to see the US dollar strength dramatically higher. And that was before the euro even existed. Okay, because yes, we've also hit parity on the euro. Right? So the way markets are reacting to this inflation, right, to the global market crisis, to the Ukrainian war, the way the Forex market is reacting is very dramatic. And what a trader wants to see is volatility, because where there is volatility, there is trading opportunity. Imagine if you just existed in a sideways market, of course, you could never make any real profits, right? And so when we look at the US dollar specifically, we see that the way that the recession, right? Let's say we don't know what it is. We don't know if we're in one yet, or we don't know if we're in one, right? But the way that market participants are trading it on the US dollar is very different than how they're trading it in the S&P, okay? The US dollar, they're almost convicted that, hey, at least something is going on, to the point to where we need to be considerate about where we're keeping our money as it relates to where our cash is stored globally. Many people are repatriating their capital from emerging markets back into the US dollar, regardless of whether they think we're in a recession or not. So it really seems as if when fear is heightened, when the idea of a recession, which is really just another word for market fear, market turmoil, market risk, when that word gets uttered, people react very quickly in the FX with tons of conviction. And that's what you want to see when it comes to trading, right? Now, yes, there are probably certain individual stocks that you could pick and say, hey, look, this particular stock is being affected quite dramatically during this downturn. Maybe you're looking at some housing ETFs. There's been a lot of mortgage ETFs that have been selling off since we fear, again, we are entering into a recession, and there's opportunity there. But as a trader and as a retail trader at the house, how much money can you actually put on those, right? How much can you really leverage up? Of course, with leverage, there is risk, but at the end of the day, you have more income opportunity in the FX because of that additional leverage. And this is why you probably wouldn't want to work with a broker that is regulated, because again, we're in markets that is highly volatile, then the last thing you want to do is put your money in brokers that are unregulated, that if they end up blowing up, they dissipate, they disappear from thin air. Okay, so this is so far looking good for Forex. Risks are heightening. Forex markets are moving very dramatically while we have the S&P at a 38.2% fib, breaking back towards the high. We just had a little bit of a breakout here of this lower structure that we've been meandering down here at these lows for quite some time, but now we're seeing markets actually push a little bit higher. Quite interesting. Are we in a recession? Right? I mean, this is giving people the argument that no, see, everything's fine. This was just a little bit of volatility. Next, I actually want to talk about that volatility. When you have volatility, again, you have trading opportunity. And when it comes to trading in the stock market, you have to really cherry pick what particular sector you want to be invested in, right? Because during recessions, there are particular sectors that you want to make sure you're keeping an eye on. One that deals heavily with retail sales, right? Because if obviously recessions are happening, then you should get some type of decline in those assets. With stocks, again, you may not know that one particular company may have had a great revenue. Apple, for example, has only declined 15% during this year. And that's because Apple is doing quite well as it relates to its revenues, which you have to be careful because that particular stock might be doing well. Apple, for example, you can't just say all tech is doing bad. Look how Apple has been exploding to the upside for the year. It's really only down 15%. Many people have said Apple has traded better than almost any other, asset throughout this entire process as it relates to, a notable blue chip, right? So you have to really cherry pick if you go to the stocks. Good thing about FX is there's 8 major currencies, and each major currency really has their fundamental catalyst baked in, right? We know when oil markets go higher, the Canadian dollar does pretty well. And what have we been seeing happening with the Canadian dollar? As we have seen oil markets push massively to the upside, we've seen the Canadian dollar start to pile higher. That's the CHF. This here is our Canadian dollar, all right? Currencies are correlated very well to the economics. Recessions deal very tightly with economies. Recessions are centered around the strength and the health of the economy, right? So this is why, again, if you want to start to get some exposure to recession opportunities, sure, there are opportunities in the stocks, but there are massive opportunities here in the FX, especially in this particular recession where inflation is the main conversation, right? And with most recessions, sure, inflation is a big conversation, but particularly with this one, we are really, really seeing it. And the public is very, very much aware of it, right? '08 snuck up on a lot of people. Sure, they had some rising prices here and there, but it was so concentrated in the housing market. In this environment, because we printed so much helicopter money in 2020, where it just went straight into people who, maybe make less than 6 figures or whatnot, it went straight into their bank accounts. Well, we know where inflation is. It's all over. It's everywhere. So when you're trading the commodities, then you know exactly what you're trading. You're trading these rising prices because of all of this surge of cash that has come into these particular commodities. And that's why I like the FX as it relates to volatility. You're getting massive price action. You know why you're getting it. And because the market is so big, you're not going to get just random releases, random data that comes out that just completely turns it around the other direction. People know that the euro was likely to raise rates today. We pushed a little higher than expected. All right, we raised that 0.5 basis points. You guys can see the euro hasn't moved since 2016. And that did give us a little push to the upside here on the euro. If you guys look here on the euro USD, this is that news release. We've pulled back, but we broke a new high. And we're now going to see if markets can continue that momentum to the upside. But overall, the fundamental catalyst that drives all these markets, right, especially again during a recessionary period, they work out, they play out, and they're not so hard to guess. We know that they were going to do something as it relates to a more hawkish stance. Now, next, I want to talk about brokers. Brokers, what do the brokers allow you to do during these periods? We know that if you have less than $25,000, it is very difficult to really maneuver around in a stock trading portfolio, right? I mean, one, you got the pattern day trading rule, which is going to stop you from really being able to say, hey, I'm in, and then what happens when you say I'm out? All right, I mean, boom, right there, your account's going to get locked up, right? A lot of times people aren't just day trading. Maybe they're repositioning, or maybe they made a decision that they don't want. And the pattern day trading rule is one of the main reasons why traders don't trade in the stock market. Again, because most of them are starting up under that $25,000 number. And if they want to make a decision to get out of a trade and maybe get back in or whatever, you really start to put your account at risk risk of being locked up. Trust me, I had a lot of experience with this in college, because when I just thought I was getting in and out of a position because maybe I changed my mind, now I'm day trading, right? As opposed to FX, of course, no pattern day trading rule. And really the brokers are gonna give you the full capacity to do what you want. Of course, some aren't gonna let you hedge. Of course, their assets are very limited, usually to just currencies like Oanda here in the US. It's just a currency broker. You can't do anything else. So you can't really put your account in a position to where you can, have some type of insurance policy. That's why we do like Thinkorswim, because Thinkorswim, you can trade FX pairs, but then they have also FX options. And those FX options, if your account is sizable enough, can give you an opportunity to, yes, maybe take that buy or sell on the Euro USD, but then you can have an option contract kind of expiring out there 6 months from now that maybe gives you an opportunity to, give you a clause to say, hey, maybe I need to buy this thing back because I was wrong in my assumptions. So that's the one drawback that I would say the Forex brokers have, is they're so primarily focused on FX that you really have to go completely outside of their ecosystem to trade other assets and to maybe put yourself in a position to hedge. Now, of course, people will say, well, no, there's some overseas brokers that have stocks and CFDs and stuff. I mean, overseas brokers can give you liquidity to anything. So, I mean, come on, I wouldn't really rest my hat on the idea of working with an overseas broker because they just give you all this access. You got to be careful there. And also, as it relates to brokers, shorting stocks or shorting indices can oftentimes be difficult. Usually during heightened times of volatility, they don't allow for you to short certain asset classes. We can see what happened, if a lot of these guys are using commission-free brokers with Robinhood or Webull or Public. Yeah, you really got to be careful, because when there's heightened volatility, now you don't even really know if you're going to get in or out of those positions, right? As it relates to Forex, though, yeah, if you're working with a Gain Capital, Forex.com, or an Oanda or a Capital.com, you really don't have to worry about this idea of heightened volatility, meaning that you don't have the ability to short certain assets, like maybe if the US dollar is falling, or even with some of those other brokers there, they allow you to short some of the indices. Right. So that's overall my idea as it relates to what asset class is best to trade during the recession. And so for you, what do you think is the best asset class to trade during the recession? I know for me personally, I really do love to keep an eye on what we see happening with the US dollar. We've been taking so many US dollar buys for the past 45 days. There hasn't been that much of a trending move in that same capacity over in the stocks, unless you're dealing with the ETFs and all these other things. But a lot of the people we work with, they don't have the capital to get really sizable profits on those particular assets because they don't have the leverage. So if you can have a larger account, then sure, working over in the stock world makes a ton of sense for you potentially. But if you don't, and you still want a little bit more profit potential, then FX just really seems as if it's a great place to be during this time, and it's going to continue to be that for sure. All right, so guys, again, like this video and subscribe. I would very, very much appreciate it. I'm trying to get this thing to grow. My channel's been growing slow, but it's time to change that. So let's, one, keep coming with content. I know it's my fault, but two, if you got here to the end of the video, please make sure you guys like and subscribe. I would very, very much appreciate it. It will keep encouraging me to push out more and more content. It sure will. All right, and I'll see you guys in the next video. Peace out.